Hello, everybody. Welcome to today's episode of the Daily Dose. Today is Wednesday, July 27th, and I know today is the third day of the week, and I missed the first 2 days, so I apologize for that. I did have a friend in town, so I was unable to record. I apologize because I know that there was a lot of things going on, but we'll touch on it today a little bit. So I just want to start with the elephant in the room, and that's with the Fed raising interest rates again this month by 75 basis points. They also increased by 75 basis points last month, which was the first time they had increased by that much since 94. So now they've done it in consecutive months. And the market reacted very positively. So we have seen this now. This has been a trend on days where the Fed hikes the rate, where the market really buys up. And now there's some people saying, we might hit the bottom at around 3,600 or 3,650, wherever that low was. People are saying that might have been the bottom now. I'm not sold on that yet, and here's why. So actually, we'll get to that in a minute. I'm going to go through a little bit of this article. I'm not going to go through all of it. So they matched their last month's hike, which was the first time they'd increased it the rate by that much since 94. So now they've done it in consecutive months. And now the short-term borrowing rates are between 2.25% and 2.5%, which is where they were at before the COVID recession. The Fed said that recent indicators of spending and production have softened. So they're trying to say that their strategy has worked because they're trying to slow down. They're trying to slow down inflation and people just borrowing money for next to nothing. So inflation was at 9.1% in June. So there was really no sign of that slowing down. So they really needed to do something about it. And they're in a tough spot because the economy is not necessarily in a great place. There's a lot of geopolitical pressures. We're facing a recession in the United States, possible housing crisis or a crash coming up soon. So the Fed really has a lot to balance here because one of their mandates is, to control inflation, but it's also to keep a stable economy. So as of right now, nothing is broken yet, but that doesn't mean that something won't break. So what I was saying just a little bit earlier about the market reacting positively and how some people might think that we might have even reached the bottom already. And here's why I'm not sold on that. So the underlying thing that has been driving the economy down, in my opinion, is not inflation. It's not inflation. That's what the media points to. That's what everyone points to. But I don't think the market is going down because of inflation. It's not helping, but it's not the reason the market was going down. Why did the market go up? Let's start there. Why was the market up so much after COVID? It wasn't because companies were making a lot of money. It wasn't because earnings were going through the roof. It was because of all the quantitative easing and the easy money policy and all the money going into the economy, all the QE basically. So QE was the reason why the market was going up. And then the Fed pivoted to quantitative tightening. And today, by increasing the interest rates by 0.75% again for consecutive months when they haven't done that even one time since 1994, tells me that we're still in an unprecedented quantitative tightening cycle. So I think, in my opinion, that the market is going down because of the halting of the easy money policy and the QE and the introduction of this really heavy quantitative tightening. And today, the Fed proved that that's still the plan. That's still what we're in the middle of. So to me, the markets are more optimistic that the Fed is going to get inflation under control, and basically they're saying that, okay, we think the market was going down because inflation was out of control. That's not really how I see it. I see it that we're still in the middle of a big quantitative tightening cycle, and that the market should continue to go down while we're in this. So I'm not necessarily saying that we've hit a bottom. I've seen some posts on Twitter and whatnot of people thinking that we hit the bottom. Jim Cramer said the market's going to rally. I don't know. Today it did, but Will that be sustainable? In my opinion, no. But I guess we'll just have to see. So let's take a look at the S&P 500 today. We gapped up higher and kind of stayed flat for most of the day. And then right here, this was about 1 o'clock Eastern. This was the reaction to the Fed raising the rates. We popped a little bit, went back down, and then we really just bought up through the end of the day. So the S&P 500 had its best day since April of 2020, which was ironically near the COVID bottom. So a lot of people are drawing some parallels to that. But in April 2020, the Fed was in the middle of instituting QE, and right now they're in the middle of instituting the exact opposite. So I'm still not sold that we've seen the market bottom. I think stocks could go way, way lower. And especially since you're seeing so many big companies missing on earnings. I mean, Google, Microsoft, Walmart, who missed today? Best Buy. There's so many misses. If you look at the rate of earnings beats to earnings misses, usually the beats are around 75%, and I think now they're sitting around 60. It might be even a little bit lower now. So really we're seeing a recession in earnings from especially the biggest companies within the S&P 500. So to me, there's no underlying factor that says that we should have hit the bottom. To me, all the signs are pointing to the markets should head lower. I mean, I'm not saying sell your stocks or anything like that, but I'm not buying into all the euphoria in the market, especially today. So enough of that. Just wanted to get that out, especially since I missed the first couple days and there were some earnings on those days. But let's take a look at Bitcoin, because Bitcoin has been faking everybody out. And we had these two zones here, but I think it might be better now to look at it from this standpoint, the way it's been acting. So Bitcoin broke out of the range, and we thought it might have been a false breakout because it came back into the range. But if I was looking at it earlier, and if you look at it from this standpoint, so let's draw this. Let's just make this a line, basically. Let's just make this a line. So let's see if we can move that up. Okay. So if you look at it like this, and this isn't the most reliable technical level. I really like using a zone better because it just gives you a little bit more wiggle room. But if you look at it from right here, it looks like Bitcoin still broke out of our range. It looks like this was more of a false breakout, especially with that wick rejection. And a breakout through the trend line, selling back, and it looked like it just, what I mean when I say faking everybody out, you could have thought that it broke out here, wick rejection, sold right back off into the bottom of the zone. Broke out of the trend line, everyone's getting euphoric, including, I'll include myself in that group, because I was expecting Bitcoin to possibly move aggressively to the 28,000. I wasn't expecting it to go higher then, but I was expecting it to make a move after breaking out of this trend line that had been reliable since the end of March, beginning of April. And it came back down, and it looked like it was going to go back in our zone, and then it immediately bought back up, and now it's back out and looks like it's breaking out. So it's hard to tell what's going on with Bitcoin right now. It did break out of that zone, so maybe it'll form a little base right here and then still move to the 28,000. Okay. So I was having a little bit of technical difficulties. I'm going to wrap it right here. I do apologize again for missing the first 2 days of this week. I will be here the rest of this week, and we'll have another great weekly wrap episode this Saturday. Thank you for joining me today. I hope you all have a great day, and I will see you tomorrow.